Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, June 13th, 2019. In this video, we're going to take a look at various trend indicators. There's a lot that goes into my analysis, more so than just the same old candlestick charts and price and support and resistance levels and trend lines and all that I usually cover in the videos. So from time to time, I'll post some charts or do a video on things like this. So we'll cover some trend indicators, not by any means all inclusive, just some of the ones that I follow. And then in another video soon, I'd like to do an update on the breadth indicators. I have numerous, probably dozens of different various indicators on market breadth. And we'll look at that as well. So those are things that are all part of technical analysis in addition to just support and resistance levels and chart patterns and all that stuff. All right, so we're going to start out here. You could probably see this is there's a layout of 4 different trend indicators up here, and if you look in the upper left-hand corner here, you can see monthly trend. So I have really 4 trend indicators on this view: monthly trend here, weekly trend, daily intermediate trend, and then the daily short-term trend. So we'll go through each one. We'll look at a few different indexes, various indexes, and then wrap it up from there. All right, so let's start out. We'll go longest term and then work our way in. So here's this is again a monthly chart of QQQ. So the black line chart right here, or the black dotted line, is the monthly closing prices of QQQ going back all the way into the about 1990, early 90s, late 80s or so. And so you can get a good feel for this. Now, what I have are, I've created these custom histograms, and I did a video years ago, posted that, and if you remember the site, just let me know and I'll drop you a link to the video. But it shows how I can do this on several, figured out how to do it on some, but not all charting platforms. Some won't let you do it. Now what my custom histogram is, it shows you, let me change a tool color here, hold on one sec. Okay, I had all the tools set to stand out against black background charts. All right, so what you have down here are 2 indicators, a 10-6 EMA pair, and that's the same as the blue lines up here. You can see at the very top I have a 10-period exponential moving average and a 6-period EMA. And down below I have a completely separate indicator. So this one right here, the 10-6, all I've done is taken these 2 trend lines and figured out a way how to show me in a visual format when they cross over. So the histogram down here, when it goes from red to green, it means that you have a bearish cross, or what we call a death cross. Anytime you have 2 moving average pairs used to identify a trend, when you have the fast line cross down below the slow line, which the red line's your fast line because it's a shorter term EMA, therefore it's going to react to prices quicker. So when that shorter term EMA crosses down through the longer EMA, they call that a death cross. And again, you can use it with any pair. It could be a 50, 200 day moving average. It doesn't matter. That's just a term for a bearish cross. And then when you have a bullish cross with the fast line coming back above the slow line, they call that a golden cross. And so what the EMA that I have below will just visually show you, we're zoomed in pretty good here on the video, but then you can kind of get a visual when they cross, and also the differential between the 2. The longer these, the taller these histogram bars, or the deeper they are down here, it means the farther apart the lines are. And so obviously when they're coming together like that, you can sometimes kind of anticipate a crossover. Doesn't always mean it's going to happen. These EMAs, if they're key pairs, they sometimes will bounce off each other, and that's where you'll see the histogram kind of come on down to the 0 line. You had a little whipsaw there, and it'll test that 0 line, the histogram, meaning the 2 EMAs are kissing. And I'll always say this, I say this a lot: try to stay away from using moving average pairs. Some people use even a combination of 3 different moving averages on various time frames for trend indicators, buy and sell signals. They work best in a trending market, not very well in a choppy market. You're prone to get more whipsaw signals, so just keep that in mind when using those. And so you can see what this has done here. If you visually just take a look, the green bars tell you bull markets, or the primary largest trend that I follow, the monthly charts, is bullish, and it told you throughout this was the greatest bull market in history. This one now it's right there. It's either going to be there very soon. I think I don't know if it has a few weeks, months left in it to match that record run from the run back in the 90s, but that was and probably, may still stand to be the longest bull market in history. And so you can see again, if you guys have been around or you study history, we had a bubble back then in tech stocks, and also Fed-induced bubble, like most bubbles are. And then we had a sharp crash, especially in the tech-heavy Nasdaq, more so than the S&P 500. But of course, we had bear markets in both. And that you can see, it did a pretty good job back then, and throughout history, throughout time, of telling you that the largest trend is bullish or bearish. And again, so monthly chart. Now you might say, oh gosh, that's the holy grail, Randy. Why don't I just get short when it's red and get green when it's long? And you can absolutely, and longer term 401k money, that type of stuff. And I've covered that in the past. That's what this chart's great for, as well as the weekly chart we'll get to in a second. But it's not without its whipsaws there. So like everything else, nothing is perfect in trading. There's not one single perfect indicator. If there was, someone would have it. You wouldn't have to work, and that's that. I can just tell you that market conditions through time change. So some indicators work great in certain market environments, and then they just get chopped to pieces in others. So that's one thing, whatever you're using. And the bottom line here is I take all this into consideration with everything else. All right, so that's that. You can see again the the histogram bars. Look like we had a couple close calls right here, and some of those corrections back in 2016, 2015, and then again in that fourth quarter meltdown. But my longest term trend indicators, not all. Some of them did flip bearish, but not this one. And I mentioned that at the time, and we're still waiting for that. Now you can take some, predictive value. It's not 100%, but it's very rare. But sometimes if you get divergence like this, that is a pretty ominous sign. In other words, the divergence means the stock market made a new high, not the stock market, I'm sorry, just QQQ primarily, made a marginal new high, and there was severe divergence on this histogram here. So that's something to note, and that also plays into my analysis. The ROC 13, it means rate of change 13. You can see that it's an indicator most charting platforms have. Sometimes I'll play around with the numbers and change it to a ROC 12, even a 14. The higher you go up, it just helps to filter out whipsaw signals, but then you're going to get slower signals when they come. So watch, I'll go from a 13 to a 14. Here's a little red bar, let's see, or here's a little red bar right here. And again, that's on a monthly close. That's what you need to wait for when trading off this, which is a monthly time frame. So if I click up to a 14, that red bar goes away. There's one less whipsaw signal. And again, I'll play around with it on different indexes, but I tend to find that the 13 or 12 number usually does a pretty good job. All right, so enough spent on that, and also on explaining how these work, because the rest are just similar, although they use different moving averages. So now let's go to the weekly trend here. And as I do this, I also want to say this, that the longer term trends, the reason I keep an eye on all of them is they are much more reliable when you get the trend changes. And they're also looking at the primary trend. Like I'm saying, 401k type, long term, hey, if I've got to either be long or short or in or out of the market for the next 2 or 3 years, and travel around the world where I can't trade, this is that chart you're going to use, or at that point in time. This is more swing trader, trend trader type charts. And again, they're all taken in conjunction together. All right, so we're going to move over here to the weekly chart. And before I do, let me just also reiterate that, or make it clear that the shorter term you go on any trend indicator, the more prone it is to whipsaw signals. And you're going to notice that when we get down to the the shortest term trend indicators. They tend to give you more whipsaw signals than the longer term ones as well. All right, so let's go over here. Let's go to this weekly trend. Let's see if I did that correctly. Control, expand, there we go. All right, so on the weekly here we have, I have the EMA pairs, a 17 and a 43 EMA. And again, I just showed you down here, I just have the histogram that shows when the two cross. This one's only going back to 2010. I do have some longer term charts. Maybe I'll pull one of those up here in a second. But so you can see here, this was, if you remember, if you were trading back here in 2015, 2016, we did have a bear market in some indexes, small caps, mid caps. The QQQ came right down around the 20% mark. And again, that's if you want to use that, the historical definition of a bear market, or the widely accepted one, a 20% drop off the highs. More so, this was just a correction in an ongoing bull market. As I said, my nickname for this bull market, it's supersized. Everything, the Fed has supersized this cycle, this market cycle with the free money, easy money policy. So the corrections are bigger, the rally's bigger, the bull market's bigger, and you know, quite likely the next drop, when everything gets undone, will probably be bigger as well. All right, so that's that. You can see that it can give you some whipsaws here. In that case, it did. I want to just point out, I put the bar there when we crossed red, and that pretty much told you too late. It was pretty much at the bottom there. But here's the thing: it was a whipsaw signal. So if you were just trading, let's say again, your 401k money with this, you have been all the way through here. You would have gotten shaken out there by this one indicator. And again, important, very important. Take this into conjunction with other analysis. If I'm not mistaken, I was short most of that move, bullish, looking for reversal for a lot of bullish evidence in the chart. So if you have let's say the stock market falling to a very well-defined support level, you have bullish divergences across the board on multiple time frames, bullish candlestick reversals and all that, that would have told you at that point, don't go off this. So what I'm trying to say is, don't trade off these in a vacuum. Use it with in conjunction with many other technical tools that are available to you to help filter out, decide when to take these signals, or when maybe to hold off. But again, so even if you took it, it got you back in here and here, and it said trends bullish, until again we had things did fire red back in the Q4 drop. We had that trend indicator go down into the red and then back green again. So that's what we're watching now. And you can see right now the green line, the 17 is clearly above the 43. So by this trend indicator, QQQ is still bullish right now. Here's that same weekly trend indicator I'm just using on stock charts. I'll go back a little farther here and show you that it does like I said, whipsaws. These black lines are whipsaws. So there's a whipsaw for the most part, a whipsaw there, and a couple whipsaws here in recent years. But it also does a great job, even if you took the whipsaws and got in and out, and you had a small loss or you broke even, but you traded the bigger signals. You can see it had you long, or telling you that we were bullish up, but it's a weekly indicator. So look, it didn't get you out of the top. In fact, that was a big drop in the, oh no, here it is. This is the NASDAQ composite down here. So by the time it gave you a sell signal, we had a pretty healthy crane. You would have felt a lot of pain there. So again, you take them in conjunction with other things, which we're working our way down to the shorter term indicators. That's where we're going here now. We're going to look at those short term indicators, because they would have got you in a lot sooner. And and again, used in conjunction with other analysis, long-term charts, all that, may have had kept you short as a trend trade, or helped you game this first counter trend rally right here in the NASDAQ after it topped back in 2000 there. So but with that being said, even if you waited and took that pain and then got short or got out, you avoided the bulk of that bear market, and then it got you back in, not right at the lows. Again, it's a weekly trend indicator. The signals are going to come after the bottoms and tops, but it, for the most part, with a few whipsaws, it said stay long throughout this entire, down here guys, this is the bull market, but this is the trend indicator up here. Stay long. Now this doesn't look like much right here, but that was the Great Recession, one of the biggest bear markets in history. Again, because the scaling on this chart is so distorted. This is not a log chart here on this particular example, but that told you at this point in time, you can see it, that weekly indicator was bearish, pretty darn close to the top. There's 2008. The market topped in October 2007 right here. And so that trend indicator did a good job of telling you to either stay out of the market if you don't short, or get in and short. And then this is all, you can see then the great bull right there, with, again, a few whipsaws, as I'm pointing out here. Nothing's perfect, but it does a pretty darn good job. Okay, now we zero on down. We're now at the daily intermediate term trend. Okay, and this trend indicator, this particular one has two different, daily intermediate term. I'm sorry, I was distracted. Looks like I might be cutting a little of the chart off here, and I don't think I can adjust these lines during the video, the dimensions, so we'll just leave it here. All right, so you can see simply I have a 50-day exponential moving average and a 200-day moving average. And they're again represented down here in histogram form when they cross over, and you can see back here. Again, I told you that was a whipsaw on the weekly and this daily as well, because it got you in. I told you that the trend had changed right around the bottom, but then it did correct itself and said, okay, we went back to bullish right somewhere here. I'd have to put crosshairs, and told you the trend remained bullish up until this point. Then you can see it does a good job of especially capturing the bigger trends here. So back then in October, remember, shortly after the market topped, not right after top, we were already short because of, again, things that we look at. We had rising wedges there, our trend line breaks, we had multiple sell signals, and we were short the markets then, and well in advance stated it was coming pending a breakdown in XLK and tech and QQQ, and that all came right around here. So that's how we got in. And you can also use these with some predictive value, because you can see as the market was heading higher, we had divergence here, and we could see the lines curling down and then starting to head down sharply even before they crossed. Sometimes by jumping the gun like that, you get burned because they can bounce, but again, you could see it here as well before they even flipped to red. So there it is. Point being that it kept you, or at least that particular trend indicator told you this entire time right here, bearish trend. So it didn't get you out of the bottom, nor is it going to, because it's an intermediate term trend indicator. Only the shortest term trend indicators and other technicals there will do that. So there it is. Throughout from this point up until the highs and until recently, it said that that trend was the trend was now or was bullish. And then recently, you can see the crosshairs, we flipped over to bearish again, and we're still bearish. That's why I wanted to point this intermediate term trend, at least on QQQ. SPY and the Dow, they're trying to cross today, but what I want to point out is that once you get these big trends, it didn't really happen here because this was a very powerful sell-off back in the fourth quarter. But quite often when these trend indicators flip, and you go back longer time, as I mentioned earlier, the trend lines, the moving averages, like right here, will come up, appear as if they're poised for a crossover, but then they get rejected. And so that's what we're looking for here, and this kind of all meshes. The tie into this video, and the one reason I wanted to do it now, it all meshes with my expectations that, look, either I'm right on this, and this is just a counter trend rally, this right here, and a much larger drop to come. And if so, you should see these trend indicators remain bearish, even if they briefly pop above. Sometimes they'll make a bar or two, but you want to see these shorter term trend indicators remain on sell signals, meaning those moving averages right now. Right here you can see it, the 20 and the 50-day EMA. You ideally you want to see those rejected if they try to cross over or roll over now, and if not, then what happens is you have a golden cross. So right now, the way it stands, we had a death cross here, at least on this particular pair. Remember, there's other pairs, but right there at that point, we had a death cross, the 20 crossed down through the 50, and that is in effect for now. They may cross over, and then we get a golden cross, and it was a whipsaw signal in hindsight. We won't know that until, maybe next week or so here on QQQ. But let's move on. You know what? While we're here, while we're on this one, let's look at the other indexes too. All right, there's SPY. As I mentioned, SPY is just crossing over, but we don't have QQQ yet, and that holds most of the market-leading stocks. So we'll watch this. As of now, again, you are crossing green. We did cross a couple days ago, and we're slightly in with these moving averages crossing back bullish again. Here's the Dow. The Dow is still on a sell signal with those the death cross still in play there. So what is that? 2 out of 3 bearish so far. Mid caps, I'm just trying to hit them all. The big ones. Mid cap index, MDY, that's the mid cap 400 index. Very important part of the market. I don't cover it all the time. I kind of go from both ends of the spectrum, large caps and small caps, but I do occasionally cover update MDY in the mid cap index. Clearly still bearish right now. Those lines are clearly crossed below. And again, you can see here's an example of where they kiss right here. Back here, look like we're heading up, and but right here is a test back of the zero line where the two lines where it appeared they were going to cross over, and the market took another leg down at that point, and it kept that trend indicator on a sell signal. So that's what it is for now, and that makes 3 out of 5, I think it is. And then IWM small cap still clearly, at least by this one trend indicator, still on a sell signal right now. Alright, so now let's take it down one more notch and go to my, at least on this board, the shortest term trend indicators. This is, we were on IWM, we'll stay here, we'll just work our way backwards. Alright, so on this trend indicator I actually have a total of 3 different trends. And again, these are short-term trends. As I said before, the shorter the trend, the more whippy you're going to get, the more false signals. Also, it works best with a strong trending market, not a sideways market. When you get kind of in choppy sideways stuff, it doesn't work that good. But for the most part, you can see the big trends that it captured here. Here's some whipsaws, or they might have actually given you some tradable signals there. Let's just look here. Yeah, when that triggered, there was a little more downside. When this one triggered, there was a little more downside. But again, if you just use it as standalone buy and sell indicator, which I don't, you would have shorted there, and then you wouldn't have covered till right, where is that? Somewhere, well, right about that point. Not a big loss, but again, I wanted to just make clear, they're not, at least by me, they're not trading signals, buy and sell signals. They're just indicators that kind of take a look, see where things might be going. And the other value added things, again, you can look at divergences between a lot of these indicators. That's why I like using the histograms, these custom histograms I created. There's the market, or IWM, not the market, IWM making a new high with these EMA pairs, or these indicators making negative, putting in lower highs or negative divergence. So let me just start from the top and work my way down and show you the different trend indicators. One of them, it's very simple, it's just that blue line here, which is the 20-day EMA, exponential moving average. So the black dotted line is IWM, or whatever index I'm trading, and it's pretty simple. There's 2 takeaways from this one. Number one is when prices are above the 20-day EMA, the trend is bullish. And when they're below, they're bearish. Like I said, you're going to get some whipsaws, especially in a sideways choppy market. But in this case, once you saw the market started really falling, you watch for the 20-day. Now we popped above it there, and then we fell back below. And again, you're going to get some whipsaw signals, but for the most part, you can see the vast majority of the time during this drop back here in the 4th quarter of last year, other than these 2 brief pops above, IWM was below that. And from this point on, up until here, it was above. Crossed below, and then we just had nothing but mostly sideways action, slightly higher. And recently it's been below, it's just regained it. So that's one use of the 20-day EMA. And the other that I like to use is simply look at the slope of it. A slope, positive slope is when a line is headed up. Negative slope is when a line is headed down. So you can see that also does a pretty good job of telling you. So right here you can see it was a positive slope, a little downward turn, but then positive again, positive, positive to this point. The line turned down, and at that point we went positive briefly, but very briefly, and back down again. So most of that leg down, the slope of that line, the 20-day EMA, was negative, and actually since up from the lows up until this point, maybe with a brief little dip down there, the slope was positive. So there's 2 takeaways or 2 uses for that 20-day EMA. We're going to get to SPY and everything else in a second. I just want to walk through the indicators. And then down here, you don't see the lines up top because I didn't want to busy up the chart too much. Actually, they're there. You probably can't make them out in the video unless you have a good high-resolution monitor. But there's a pink and a green line right there, the 26 and 13-day EMA. And again, that also will help signal the trend, as you can see right here. I told you at this point, confirmed this short-term trend indicator went bearish somewhere up in here and stayed bearish, and so would help to filter out those 2 whipsaw signals right there, at least on the 20 above, and told you that the trend remained bearish up until this point. and then it flipped to bullish. And with just one little whipsaw, it remained bullish up until the recent highs, and right now it still remains bearish. And then down below, just a little variation also through a 2613 EMA histogram. It's going to give you a very similar reading, but those are some of the ones I use short term. All right, so now let's look at the other indexes here. SPY on the shortest term. Again, these short-term trend indicators just recently popping green here, in the 20s pointing up and everything else. So that this short-term trend indicator is bullish from the recent rally we had. QQQ remains bearish, at least by the histograms down here are both red, but the 20s turned up there, so some mixed signals there. And of course, as to be expected, it's been a pretty strong rally. And then we'll do SPY. No, we did SPY. Let's do MDY. MDY still bearish, at least by the two down below. So that kind of gives you an idea where things are now. One of the takeaways is that we have a lot of these trend indicators that flipped recently to sell signals. So far, they were pretty deep in the red, these shorter term trend indicators here. Let's go to QQQ back there again. Pretty deep in the red. Could prove to be whipsaw signals. But they also could be coming in here and back testing, and sometimes all trends start with a little move down and then continue. So we're just at that point. I guess it's a takeaway where remember for the last couple weeks, actually, even before the bounce started, I laid out uppermost bounce targets, and that's about where we hit. We just slightly overshot those the other day, and we came back down to them. I'm talking my 60-minute charts on SPY and QQQ, and that's where I quote unquote think that if it is a counter trend bounce, this is about where it needs to reverse, and that also jives or meshes here with the these trend indicators that are bearish now coming up, and with a lot of short-term trend indicators testing levels where if they go up much more, they're going to all cross, and then we'll have SPY, the Dow, small caps, mid caps, QQQ, all of them go back to bullish, trend, shorter term trend indicators. And then, longer term, I don't cover these often because there hasn't been much to report in these. I have covered these in the past, and first one obviously going to roll over will be the weekly indicator, or it should. But we do have some pretty strong divergence on the monthly there as well. So that's it. So right now we focus on the short term, see if that trend remains bearish, and if not, if we start flipping back bullish, that means the market's going to take out those those levels that I said recently, and there's a little upside to keep that divergent high scenario intact, but much more than that, we'll probably be looking at new highs, at least in the S&P 500. QQQ is still pretty comfortably above the previous highs. So like I said, it's just too early to say with a high degree of certainty whether this is only a counter trend rally and a much larger drop to come, or just as it's way too early to say that the market is going to go to new highs anytime soon. We're kind of at that decision spot, I think, where the next 5% or so in the market could be pretty telling as to whether we are going to continue to new highs or we're going to take another leg down. All right, we'll wrap it up here, and like I said, I will work on a video because there's just too many charts to cover in static format and chart image posts on the front page. So I'll do a video on the breadth indicators soon. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.